Good morning, good evening, ladies and gentlemen. Hope you're well. Welcome to another episode of Market Minds FX, where we'll be going through our lovely trading pair of GBPUSD. We always love to trade, and honestly, I just think this pair is amazing, and I really like it. I do really well with it. I like to think so anyway. And it just gives ample opportunity, to be honest. So today is 30th of August 2023. So let's start off with the monthly time frame. As you can see, we're near the end of the month, and so July was where we had the massive pump, followed by the retracement. If you remember our Elliott wave count that we had, that was the one that told us we were going to come down. And so we went from there all the way down, and we've had the month of August as a very good retracement, to be honest. And you think about it, we've had the top, we've declined from there, and we've gone even more down. So more than likely next month will be even more down, to be honest. That's certainly what it looks like. But we'll see when we get there, actually. To see whether we get a retest of whether we get a double top or not. As you can see here, we sort of had a double top followed by a huge move down, and we could potentially get that, have another double top followed by a huge rally downwards. So that could be one option if we're thinking long terms. No new levels because we're still at the monthly, and so will we have a new monthly in a couple of days? Yes, we will, potentially, unless we head up to here, which we could, I mean, we've got 2 days, and time frame wise, we've got, there we go, price range. We can go about, yeah, just about under 0.5%, 0.4%, sorry. So less than that. So yeah, can we head up? I don't see why not. And we'll see when we get into this local time frame. But yeah, we could potentially have not a new level, but just another monthly level there at the same place for us to cause to have major confluence there. Because if you have 2 levels and both monthly and being very well respected, that means there will be a huge amount of resistance at 1.26930. So that's something just to keep in mind. And the alternative is we could head down and go to 1.2554. Yeah, we've hit that once already. There's no reason why we can't hit it again. Weekly wise, let's see if we've got any levels. Let's turn on weekly. So we've got this weekly here that we've opened this week. But to be honest, it is so close to the previous weekly that we've got there that I don't see there's any point adding on, because we've already gone through it, gone back up, so I think that's fairly good level of support that we've got there, because we went through it, sort of stopped there, retested it, went back up again. So yeah, I'm happy to keep the weekly level, and we don't need to draw any more weekly levels. Just see above us we've got that monthly, and then the weekly up there, and down below we've got the month. We've got this monthly here, and quite a fair value gap. Quite a steep fair value gap here, because all these there's literally nothing here, which basically means once we lose 1.2554, our next target is 1.24378, and if we lose that, yeah, potentially weekly level, but nothing major till about 1.239 and really 1.23250, which is your next major level of support. This weekly level, as you can see, it goes all the way to May of 2022 as well, to be honest. And again, this weekly where we are at the moment, where we're heading towards, was around, you could argue, almost a resistance level for if we were to go back to May 23 and then all the way back to May 22. Funny how in the month of May we're hovering around the same level, which is quite peculiar. Potentially completely coincidental, but Funny how like this is May and June, and then here we've got May and June as well. May and May. Okay. So yeah, that's that. So do I need to draw this level? Not really, because we've gone through it so many times. But it's always good to remember that it's still a sort of a zone, really. And let's go into daily. Can we plot any more daily levels? I believe we can. So we are here at yesterday's daily. I think that's definitely one to keep in mind. And the one below us as well. I think that's an important one, because that's, you know, we had the open at that level, the close on the Friday, opening on the Friday, and then Monday we sort of closed around that, and then Tuesday obviously we sort of went through it and come back up in above it. So I think that's a decent level to draw. And yeah, nothing really above us. So we had a steep retracement, and below us, yeah, I did. We could, I think it's worth drawing now, but we could have this level here, which is another daily, and below that we got a monthly, yeah. Well, I'm happy with that. Yep, I think this would potentially be a level that we could work on, even at least for intraday trading, whether we get to high time frame trading or not. Definitely the intraday trading. Okay, so that's our daily, monthly, weekly levels done. So next is then we can draw our other levels. So let's go into our 4-hour chart. Wait, before we do that, let's put this is the daily, put that in the daily chart. Come on, there we go. And then this one is another daily. Put that in the daily one. That's another daily. Don't think we added any weekly or any monthly ones anyway. And in weekly, nope. Okay. So from what I was thinking was, previous thinking was that this is a key area. Now the reason why that was, that if we go in the 4-hour chart, you can see, let's go to these dailies and weeklies to make things a little bit easier. So as you can see here, we had sort of resistance, come back down, resistance, come back down, and this is almost the second or third time you could argue we're hitting this resistance level. And now what is key about this resistance level is if we were to bring it across, it sort of lines up around here, as you can see, and then we were hitting it here as well, around that area. So that's going all the way to beginning of August. And let's see if we can find anything even going back, to be honest. Yeah, bottom of this sort of range, as you can see, that this, anything above it, we've sort of hovered above. You can see it's turned support, 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 turn into resistance, resistance, and yeah, I can clearly see that we could potentially head down at least somewhat before we retest it. Obviously, of course, we can always just go straight back up and turn it into support again, but generally speaking, as you can see, you're going to go back even more, to be honest. It's all the way. Oops, let's go back here, really. Yeah, I'm happy with that. Okay. So yeah, as you can see, it's turned into support, so almost retest there, test here again, support, 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 resist, and then turn into resistance first touch, second touch, and knowing this, how always on the second touch, we get a much stronger movement. So you can see, so in a first touch, almost second touch, we had a massive boost. First touch, second touch, because obviously this time the price is trying to go down. Even on the second touch, we still had fairly decent movement, as you can see, all the way from here to here, about a 1.5% almost move before we head back down. So no reason why we can't, or we've hit this and why we can't go down again. So that was one confluence that we can see. Now if we add on to our monthly, weekly levels, don't have anything there really. Well, we have this daily that we've got, but yeah, we're below it, which is obviously bearish. So that's our second confluence. So we've got this resistance area, we've got the daily that we've failed to clear. I think that was yesterday's daily as well. So we failed to clear that as well. So yeah, that's the second confluence we've got for a short around this area. Now the other thing that I had was a parallel channel. That's the, there we go. So if you look at this parallel channel, so you remember how we had the other parallel channel, if I zoom out a bit, if you remember from one of the previous videos, we had a parallel channel that was doing something like this. Start at the top, coming back down, and then it's sort of doing something like this. No, actually that wasn't right. Doing something like this. There we go. Yeah. Yeah, it was doing something like this. So where it was touching the top, and then on the bottom, and the middle was being respected, and top again, and the middle again, etc. So we had like, you could say 1, 2, 3, 4, 5 really, almost 5 touches before it sort of fizzled out. So that parallel channel that we had coming down, so obviously we've sort of broken out from it. Theoretically, you'd say we come back in and touching the top again, but I was like, well, it sort of played itself out, to be honest. There's been enough touches of it, and then that we can sort of, it's not being very well respected. And usually the month of August we go sideways anyway, so as you can see we've literally gone sideways from here, from about, yeah, beginning of August, look at that, 3rd of August, we've started going sideways. So this parallel channel was the one that we had initially, but I think that was no more longer in play. So the new one that is oops, this one, look at this. So I think this is another one that's held really, really well. Top, middle, bottom, so first touch, second touch, third touch, fourth touch, fifth touch, and we've sort of like, gone below it, retest once, retest twice, and potentially we're going to head lower as well. So this is the other parallel channel that I thought was holding on quite well. But again, we're at the bottom of the channel. So generally speaking, when you're at the bottom, you're going to take a long, and when you're at the top, you're going to take a short. But however, we've gone back down, and we're starting to touch this part as, almost resistance really. Now, let's zoom in a bit more. If you look at here, so this, forget our key area for the time being. Okay, oops, I don't leave that one. So yeah, if you forget our key area for the time being, is that we've got support, come back down, turn into resistance again, come back down, and we're potentially above it. But have we cleared that top high? So 126544, and the high we've got here is 126548. So just a little bit, but as a zone, we're still into that resistance. So this key area that we've got is still very, very important unless we clear this key area, and then we're going to head up here, potentially for the middle of this channel, and potentially the daily up here, and all the other levels. We're still, looks like we're going to head back down here again. But remember, these are all confluences. We're trying to look for confluences as why we can take that trade. So we'll have a upwards or a long idea and a short idea. So this is at the moment we're looking for short ideas. That is a good place to short. Okay, so we've got the parallel channel, we've got the key area that we saw, and we've also got the daily there as well that you've seen from the previous drawings. There we go. Okay. Right, so let's have a look at the fib retracement. So let's zoom out a bit. We're going to look at long-term, firstly, retracements. So that was for the support level. So this was, if I remember correctly, we did a literally from the bottom of this upward move, which was from May 23 all the way to there, would come up around here, the 1.25803. If you remember, we spoke about this last week, about how this was a key support zone. So if we add on some of the other levels, I believe there was a monthly there. Yep, there's a monthly there, and then we had the 6-6 level there. So we said this was a very key support zone. And as you can see, exactly what's happened. We've touched the monthly. We've had the first touch of the 6-6 level, gone up all the way up to there. We had that massive up and down day, volatility on Friday, and then we've sort of hovered around the 6-6 level and gone back up. So even though there is support, but in that sense, if you think about it, we've sort of just hovered around here and gone up. We haven't had a massive move from the 6-6 level, which again shows more bearishness, in my opinion, for the pound. As simple as that. Until then, unless we clear this key area, it just sounds to be more heading down. So anyway, that was the retracement that we had originally. But I don't think it's in. You could say still in play, but we've crossed out. We've done whatever we needed to do. If we were to bounce from it, we've bounced from it, which we have. But now we need to decide what to do here. So at the moment, this doesn't really help. The only way it does help is if we go up. You could hit the 0.5, which is a middle of the channel as well, and then come back down as well. So that would be our secondary short position if we were to get up there. So in other terms, if we do Fibonacci from here, our latest move up to the bottom, again, so 0.55 comes up here, and 0.66, 0.618 come around the middle of the channel. So that's a perfect, well, good confidence for another short up there though. But it doesn't really help us in terms of anything we're doing keenly at the moment. But yeah, this level, middle of the channel, again, we've had more confidences there, so that's definitely good. Okay, right, so in the other one I really like using is our fixed range volume. So, if I zoom out a bit, you can see I've selected this all the way from this move up. So what that does is gives us the whole range to say where's the top of the value range, the point of control, and the bottom of the value range. And at the moment we are at the bottom of the value range. And this is so well respected, as you can see here. Like today you're thinking, okay, well, why did it not hit the monthly and hit this level here? Or why did it bounce off there? Is because this is the bottom of the value range. We had the one day where it went, but apart from that, this has held up as really good support. So we've got the monthly, and this has really good support level there. And if we add, yeah, so more than the 618 and the 66 level, this level, the value area low of this point of control, has held really good as support, and again we've bounced up from there. So middle of this channel is just around there, and we've got just above us is the point of control. So if we were to clear this, potentially this would be a better short really, because the point of control with this fixed range volume is absolutely spot on. It's very well respected. Yeah, so that's our second level really. So Okay, so let's zoom out a bit more. So I always like to keep it simple as that. We are at resistance at the moment, at this key area. So if we were to take a short, our stop loss would be above here, right? And then we'll look to take profit around the value area low. And similarly, if we were to take clear this area, start to retest this, I'll definitely wait for the retest and then go back up. So in terms of retest, let me show you something that happened today, which is a really good example, and I really enjoyed it. So as you can see here, so it's not going to show the point of control for some reason, so I have to zoom out. Come on. Give it. Let's go 30 minutes, so this should still show. Okay, so anyway, either way, here is the point of control that we've got, right? With the fixed range volume. And this one here. We'll try on the hour chart. Good. Come on. There we go. Okay. Now that is showing, as you can see here. It might show on the hour chart. Yeah, it does, just about. So we had touch of the point of the value area low, went back up, and we had a clear retest of it to head back up. So once it's retested, you can take a trade from anywhere, and you would have been perfect. Would have been in a healthy trade up there. Similarly, we're looking for something of a similar nature, and you could argue we've had it once, we've had it second time, and we're heading back down. Although because of the timings and that it's hit, I mean, it hit it around 8 o'clock. So let's go on a 15-minute chart to show us a bit more information. So you remember this was the point of control. So we touched it once, twice, you could argue 3, 4 times. But I would look at as this as one and this is a second retest and gone back up. So again, for our key level here, we've touched it once, almost touched it, come back down. The reason why I would wait for this proper retest is simply because the time that it hit about 8 o'clock, which is London's obviously way closed, New York is coming to closing as well, and it's generally not the best time to take a trade really. And then our second retest is about 12 o'clock, so not even, I think, not even Asia Open yet, because Asia opens at 1 o'clock, which we've opened here. So again, yeah, I would wait. I think either London or Tokyo session, Asia session will retest this, potentially even clear this if we can, but why not? And then I would look for the short from there, because I think that would be a really easy trade in the sense that your stop loss would be up here, not too long, and then you can look to head all the way back down. That's for the short position, and for the long position, obviously we would do something of, let's turn on the weekly and the monthly, and then again, so yeah, so if you do take a short from here, your stop loss could be just the daily here, which would be the next sort of step in middle, and then look to profit take at the bottom of this level, and we have the point of control, so the value area low around here as well, remember, so we can just do that. So that would be for the short. So the long would be two options. One would be wait for the retest of the key area if we clear it. The second is literally we're in this sort of new channel, so a new parallel channel, I could say, argue with this being the top and this being the bottom. And again, we could look for slightly lower below the monthly for another short up. So that would be another long position up. So that would be my thinking for a long. And so really intraday trading, so this is how would I go about it tomorrow morning. Obviously, we've got these levels, right? We've got the key levels. And then you look at your daily open. So our daily open is just here. So yeah, well, we've already got a daily here to be honest, but we can just move this one really, can't we? There we go. That's where that should be at the bottom, isn't it? Yeah. So this is where our daily open is. So we've got that. Let's label it correctly. So that's our daily open. So we're in Tokyo session at the moment. Tokyo will more than likely take out this daily open, and London will probably take out Tokyo session. So whatever Tokyo does, London will more than likely take out. So again, like I say, I'm waiting for a retest of this level or this zone basically from here, take a short downwards. So it will look something like this. So look at least around here, or your stop loss. Yeah, I mean, you could do it about here really, which is fine because it gives you a really nice risk to reward ratio of about 6 really. So that's really good. That would be my short position. And probably best is, I reckon, probably the London Open will probably be, maybe Asia will hover around here and London will go up there, to then head back down. Okay. And in terms of long position, again, we look for something. Okay, so the long position would look either, well, again, wait for the retest, a stop loss just below the daily open, and we'll look for the middle of this channel, which would give you a nice risk to reward of about 5 here. There we go. 5. Okay, so that would be the second option. And for something below, you would again look for the bottom of this, just above here, to take out this low, potentially come to the monthly, and then look for a head up again. And that's if and when we get there again, until we break through. Okay. So yeah, that's my thinking for trading idea for this week. As you can see, the parallel channel that I was talking about would be something like from here, really. Yeah, exactly that. Yeah, let's do 1 hour. I think might give us better ideas. Let's hide some of the stuff. So if we leave this key area as it is and we use that as the top, you could argue it's something like this really. There we go. Yeah, this is potentially our new parallel channel really. And we trade the channel until it breaks. Simple as that. Top, bottom, 1, 2, not really touch the bottom, and then back up again to the top. So yeah, you trade it until it breaks as the new trading channel. Okay, so hope you enjoyed that. And in terms of news, let's see what we've got. Today's Wednesday. Nothing for the UK, nothing majorly important. US, nope, nothing too interesting. So yeah, at 1:15 we've got the ADP non-farm employment change, and then we've got at the 1:30 we've got the GDP Q2 announcements. At predicting what it is. So prediction is 2.4. Let's see where it comes. So if this comes positive, so if it comes better than expected, obviously that will mean positive for the US dollar, and also in the sense that there'll be more pressure on the Fed to keep interest rates higher or potentially make them higher, if this comes good data. Otherwise, if it's bearish data, then we'll expect the dollar to go down and the pound to go up. And similarly with Q2, So if quarter two was really good, GDP, then expect the dollar to go up. Because again, more pressure on the Fed to keep interest rates as they are or increase them, because it means that if the economy is still increasing, then as inflation will continue to increase, and the job market will continue to get better as well. So that's why those are important. That if they go, if they are positive, both of these news, expect the dollar to go up. If they're bearish, then expect the dollar to go down. Yeah, and then we've got crude oil, which obviously affects oil, the oil market. Okay, so nothing else there. So that's Wednesday. Thursday, nothing too amazing. And then we've got the continuing jobless claims. That's always interesting. The PCE, the core PCE. This is what the Fed uses to measure inflation. So I think that's what we really, really important. So really important week this week. We've got the core PCE price index, and we've also got the initial jobless claims as well. And the last few times this has occurred, it's like there's always been like one's been bearish, the other's been bullish. So it's like you've got to keep an eye on it. But yeah, the PCU index will be very, very important, and so will be the initial jobless claims. And yeah, that's it. That's what we have for Thursday, and then Friday. Let's check it anyway. Friday, here we are. We've got nationwide HPI. Doesn't make too much difference really, but a good indicator of where the economy is potentially heading. US, we've got average hourly earnings. To be honest, that's not too much volatility. Non-farm payrolls, yes, definitely. That'll be very interesting. And the unemployment rate as well. So that's coming out. So that's interesting. So we've got this. So if we need this to be, so if we're sticking with the pound going down and the dollar going up, we need this to be good, positive, and we need the unemployment rate to either come on target or come below that. And I think if this is key. If, in my opinion anyway, if this comes up as like, expected is 3.5 and we get an unemployment rate 3.4, I think that would put a lot of pressure on the Fed to say you need to increase. Well, they would think anyway that they need to increase interest rates because whatever they're doing is clearly not working. So yeah, really, really exciting days ahead of us in the next couple of days. As always, let me know what you think and trade safe. Hope you enjoy trading. That's the key thing. So when you're having a good day, make sure you learn when to walk away. And similarly, when you're having a really bad day, learn to walk away as well. And just enjoy it as you go along, honestly. That's the best advice. Trade safe. One key thing is just keep your losses less and your wins bigger. Simple as that. It's only when you let your losses go accumulate and go bigger and bigger, hoping that the market will change, that's when you struggle. It's like if you made a decision, if I take a short here and the price goes up and it hits my stop loss, that's it. It's not me opening the stop loss, letting it, moving it higher and higher and higher, and before I know it, it's here and I'm in a 10% loss or something, and then I move it even more higher, hoping no, surely it should hit the daily and go up, and before you know it, it's here and you've lost like 20%, 30% off your portfolio. Honestly, just not worth it. If you hit the stop loss, let it hit, come up with a new plan. Wait for it to hit here, take another short if you think that's the right confluence. And remember, at least 3 confluences before you take a position. Right, that's it. So hope you enjoyed that. Let me know what you guys think, and hope to hopefully speak to you guys soon. All the best.